Hey everyone, Chewy is scheduled to report quarterly financial earnings results on Wednesday, May 29th. Investors are asking if they should buy the stock before that update. So I'll preview what investors can look for from Chewy when they release those results. I'll also update and answer that question if you should buy before or after or not buy Chewy stock at all. So I'll do all of that in this short video, so let's get into it.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, Chewy, in its latest quarterly update, gave investors some really critical information about the business. For one, they demonstrated that the business is slowing down. There's no doubt about that. The company said that fourth quarter 2023 revenue increased by just 4.2% to 2.83 billion. Now, Chewy has been accustomed to growing revenue at over 10% for several consecutive quarters and several consecutive years, so this is a big slowdown to be sure. Now, you can see the difference between the fourth quarter and the full year. In 2023, for the full year, revenue grew by 11 billion, which was up 10% year over year. So you can see the fourth quarter was down considerably from the first three quarters of the year. And one of the main reasons for that was a decline in active customers, which fell by 1.6% year over year to 20.1 million. One of the more disappointing trends from Chewy that they've been telling investors about is the amount of people that have returned pets that they adopted during the pandemic. Remember, during the pandemic, there was a surge in the amount of people that brought pets home because we were all advised to stay away from other people. People were getting lonely, and so they adopted pets for company and companionship, and that led to a surge in pet parents, which was great news for Chewy. But what happened when the economy started reopening is people were returning those pets, and that was troubling. I was under the assumption, and this had been the trend for a very long time, that when you get a pet, of course, some people return the pet as they were just more than what they were expecting, right? It's hard to, especially if you have difficulty training your puppy or your cat, and it's hard to adjust to that change. So always some people return their pets, but this was a lot more than usual. And so that was unexpected, to be sure. And now investors are coming around to the fact that, okay, this might continue for a little while because there was so many pets that were adopted during the earlier stages of the pandemic that there might be a bit of a gap between how many households adopt pets or bring pets home over these next couple of years. And that's what Chewy management told investors as well, that they expect a considerably slower adoption rate in 2024, and that's going to impact Chewy's business for 2024, fiscal year 2024. They've gave investors a very mediocre growth guidance for the year, which I'll share with you a little bit later. So the company did turn profitable, and they generated 40 million in net income for fiscal year 2023. 32 million of that came in the fourth quarter, which was a 25 million year over year increase. Management has done a great job in effectively growing the business, managing the business through these unprecedented changes. It's not easy to deal with. First, Chewy had to deal with an absolute surge in revenue in 2020 and 2021 because people were spending more time at home. Brick and mortar businesses were closed, or if they were open, people were trying to avoid them altogether because of the rising risks of attracting the COVID-19 disease. And then, when economies reopened, Chewy had to deal with those rapid and unprecedented changes. Not an easy thing to do. Chewy did that relatively well. They did that relatively well. They didn't make any major errors either when the business was booming. They didn't take that as, oh, the business is going to boom forever, let's make all these big expansion plans. They didn't do that. They just focused on serving those customers that came to Chewy during the pandemic. They tried to serve them as effectively as possible without thinking that this boom time is going to last forever. I like that prudent management strategy. Now, one of the things that's been apparent with Chewy's business is the customers that it tracks, those that stick around, they increase their spending with Chewy year after year after year as they get more accustomed to using the Chewy platform. They use and spend more. And you can see that with net sales per active customer, that was up 11.9% year over year to $555. Cash flow from operations jumped by $136 million to $486 million for the year. Positive. Free cash flow jumped by $223 million to $343 million on the year. One of the reasons Chewy's able to deliver such strong growth in free cash flow, in profit margins, and cash flow from operations is that 76.2% of sales are from auto ship, and that was up by 300 basis points. Auto ship is similar to what Amazon offers. If you've used Amazon's subscribe and save feature, this is similar to that. And this whopping percentage allows Chewy to optimize the shipping and logistics, which is a primary expense for Chewy. But if you're ordering the same things every month and you're scheduling those ahead of time, that lets Chewy manage that much better. It can coordinate shipping and handling and outbound shipping and inbound shipping and inventory management a lot easier if it knows precisely what customers want and when they want it. And that allows Chewy to better manage, and they've done a good job capitalizing on that opportunity and utilizing it to expand margins. So I highlighted that Chewy's giving very mediocre growth forecast for 2024, suggesting that revenue will grow to $11.7 billion at the midpoint for 2024, which will mean approximately 5% year-over-year growth at the midpoint. You'll see the first quarter of 2024, the one that's upcoming, only 2% growth expected. So it's going to rise throughout the year, according to what Chewy management is telling investors. The first quarter for Chewy is likely to be the worst, the one that they're about to report on, and then it's going to get better throughout the year. When the company reports its earnings results, I want to see confirmation of that expectation. I want to see if the pet market is actually coming in worse or better than expected for 2024 so far. Coming in, the management team was not optimistic about the growth of the overall market. I want to see how it's trended so far in 2024. So to update my recommendation of Chewy stock and answer if you should buy before earnings, well, it's trading at a forward price to earnings of 16.3. That's the cheapest this stock has been in a very long time, but it's because the expectations for 2024 are so weak. The pet market is not expected to grow very quickly in 2024. Longer term, I think the pet market will do very well. The humanization of pets trend has been a long-running trend that has people spending more money on their pets than they've ever spent going back several years. And then Chewy has several growth catalysts, including its expansion plans in Canada, that has gone well so far. So the company, in terms of risk versus reward in the valuation, is really good. That's why I've had Chewy stock rated as a top 10 growth stock and a top 25 stock to buy in 2024. I last updated that on April 30th. Now, I think the valuation is cheap enough that yes, you can buy it before earnings, but if you're more risk averse and you want to wait until after earnings, I think that will be okay too. I don't think the stock price is going to jump very much after earnings. That is unless Chewy massively upgrades that 2024 guidance and says like, hey, we were pessimistic coming into the year, but it turns out it's going to be much better. Then perhaps the valuation might jump. Still, there would be room to get in because the stock is still so cheap. Even if it jumps by 20% or 30% after earnings, it's still going to be relatively cheap according to its own history and according to comparing to the S&P 500. So I would say yes, it's a buy right now, and it can probably be a buy after earnings as well. Of course, I'll update you following that earnings release. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.